All right, guys, I'm doing a recording today because it's April 24th, 2018. And why that date is important to me is because 18 years ago to the date, I started my first prop firm job, April 24th of 2000. Now you're looking at a screen share, April 17th of 2001. What I used to do is take an external camera. This is obviously before smartphones, and record myself over my shoulder. And that's the image you're seeing. Before price ladders, we had order books. And this is about my first year into trading. I'm trading the Euro stocks, which is the market you will see on your left, and the DAX, which is the market you'll see on the right. And you could see the liquidity difference between the Euro stocks now if you're a Eurex trader and back then. Now, a couple of things to remember about 2000 is that Eurex was a futures exchange pioneering electronic trading. The U.S. markets weren't online. So a couple of things you're going to hear when I play this video that were unique about April 17th, 2001. Number one is you're going to hear someone quoting the floor of the CME. That's when where the S&P market was traded. Not anymore, obviously. So it was important what the S&Ps were doing as respect to what the European equity markets were going to do. Eurostoxx and DAX are stock indexes that obviously still exist today. The other thing you're going to hear is me walking through some of my trades, but because this day was so important, you're going to hear in the background a guy mention a surprise Fed rate cut of 50 basis points, which is bullish for stock indexes. And you'll see my reaction, how much I bought, which I was a decent sized trader back then. If you look at the liquidity, which is, I'm going to walk you guys through this before I play the video. So let me stop the screen or the video share here of me and just go to the screen share. If you look at, oh, this is weird. If you look at this 39 number, 40, that's the bid offer. Bids are all along the left, offers were all along down the right. Price ladder is obviously different. Price ladders, again, were not invented, created back then in 2000, 2001 when this video was taken. All these numbers along the left and along the right of this order book are resting bids and offers. Resting bids over here, resting offers over there. This is the DAX. It's a totally different market altogether. 05, 06 half is the way it traded. There are buy buttons, sell buttons, market orders. That's why I had this column blue, because if I clicked in this column, it was a market order. So immediately buy, get longer, cover a short. If I clicked in this column, it was a sell order. But you could put in resting bids and offers and all like. In the bottom right, you'll see where it's yellow, show any position. Minus in red, the number of contracts I was short, or plus in blue, the number of contracts I was long. I'm going to fast forward this all the way to the moment where he announces the Fed rate cut. So bear with me a second, and we're going to go to that moment right about here. I'm going to play it. You guys should be able to hear it, and I'll pause it and comment on it. I want you to focus on what you hear in the background. I knew it was a bullish event, and I knew it was a surprise to the market. The guy next to me says something that would have made me, I'd have bought more, but he kind of made me think for a second when he says, is that our Fed? Of course it was our Fed, but that moment made me hesitate. I still had bought 16 contracts, which was pretty big size given the lack of liquidity in this market back then. But you'll see this price rally. The quoter get excited in the background because the S&Ps started to rally. So let's take a listen.
Rail's got 40 left in the bid, 70 to 30, 70 to 30.
It's still
70 to bid now, first spot, 70 to bid the 50 left.
Our Fed, intermediate.
70 to bid the first spot, 70 in hand. 7 hand, 80. 7 hand, 80 bid. 80 bid, Springer, 8 hands. Nice, Fed cut trade. Oh, even bid. 20 even bid. Fed cut trade, 50 basis points. 1 even bid, 2 even bid. 2 even, 4 even. 2 even, 4 even. 22 even bid. 2 even, 4 even. 3 even, 5 even. 4 even bid. 4 even, 6 even. 5 even bid. 25 even bid. 5 even, 7 even. 5 even, 7 even. 6 even.
Come on, baby, let's go. Go fuck around. One thing I'll also mention, that was me, pardon the language, but you'll hear some scattering going around in the background because people's front ends begin to freeze. And it wasn't a common problem back then, but it happened when the markets increased volatility. really shouldn't happen nowadays, but this is 18 years ago when this technology was obviously newer. It happened, but notice the sense of calm, even though the emotion uptick, the sense of calm and the professionalism. Now, my particular order book began to freeze where it didn't lock up, but I wasn't getting filled on my offers to exit this 16 lot position. And yet there was a sense of calm and professionalism among the office. I'll replay it.
70 in advance. 70 in advance. 20
Half a point.
29 in advance. No offers. 30 in advance. 30 in advance.
I got offers that aren't lifted.
30 in advance. 30 in advance. 31 in advance.
We're froze here.
31 in advance.
Who's froze?
We are.
32 in advance. No offers.
Come on.
33 in advance.
What do you need, Scott?
33 in advance.
How do you know if it's not filled?
35 in advance. 35 in advance. 36 in advance. No offers. 37 in advance. 38 in advance. 40 in advance. 40 in advance.
I don't know how many I got.
Bargain bidding, barrel bidding.
Hey, you just got something here, Tony? You just covered something.
Here, we're catching up. No offers.
Yeah.
43 in advance.
Couldn't cancel.
No, I missed.
I can't get my print machine.
There we go.
Goes up, I can't do anything.
It's back down. I'm back up?
I sold,
I
sold you 10 somewhere.
So that just gives everybody a sense of, even though the what was hitting the fan and volatility increased, reaction to some events, the sense of professionalism of fixing the problem, covering, or helping people get out of positions because their front end was locked up and so on. But the market rallied quite a bit. The Euro stocks was 10 euros a tick, still is today. And so it was a pretty decent day for me, but it was about knowing how to react to the market. And so I thought of sharing this video because this is how I used to review my sessions and really get a sense of what I learned mostly from reviewing my sessions, and what you could continue to learn today is how emotional you could get, which really reduces your objectivity. And I'd watch myself trade and say, why aren't you getting out, or why aren't you getting in? And it's because the objective Anthony was listening and watching at that point, maybe the unobjective Tony who was trading. And that's how I got better to realize what your weaknesses might be. So I hope you enjoyed this video. It was 18 years ago to the day I started trading electronically, professionally in a prop firm. And this video was taken April 17th of 2001, almost 17 years ago to the date. Hope you guys enjoyed it.